Well, pre-market has opened up pretty much as expected with a nice positive. Probably not as positive as everybody was thinking it was going to be because the tariff news kept changing over the weekend. We got the really good news early on, I guess Friday night, that things like iPhones and MacBooks and the other kinds of electronics were not going to be included in the um, reciprocal trade agreement, but only the 20% originally was going to be put on those items. Well, that went over most of the weekend until later in the weekend we heard more, and that was that there will be a special tariff on those items to be announced later. Maybe a month from now, we'll find out what those tariffs are going to be. Theoretically, assumedly, they will be much less than the 124%, and maybe they won't be any more than the 20%. Maybe they will be at the 20% level. Maybe they'll be even less in terms of China. Of course, the numbers in the other countries would at this point be 10%, unless the new regime finds out that there are more. I think what they have to do is they need the time, the month or so, to figure out what's the real difference between the capacity in the United States. If it costs $1 to make in the United States and it costs only 90 cents to make in China, then you really only need, a 10% tariff to do that. And maybe they continue to have some kind of a punitive tariff on China. But that's kind of the thing that needs to be figured out over that 1 month time period. Well, there was a sigh of relief, of course, from the tech crowd. And we talked about that a little bit this morning. But now that sigh of relief was cut in half. So we're only getting kind of a nice increase this afternoon, giving us some expectation of an increase in the morning, barring further news. Instead of a massive increase. All right. So there was this from Yahoo Finance. So it says, without a doubt, Tesla is one of the most intriguing stocks on the market. Could we all say that that's true? The polemical views of the company portray it as either a damaged brain with an aging lineup of vehicles on the cusp of being exposed as a hugely devalued car company, or it's a technology company about to explode by unveiling its primary value creator, robotaxis. Well, in due course, we'll find out, and here is the lowdown on that, except what did they leave out of that statement? Well, they left out Optimus. Oh my goodness gracious me. How could you write an article like this and not put Optimus? Anyway, first up, some simple math to illustrate how Tesla might make you a millionaire. For the sake of argument, let's assume that ARK Invest's expected value price target of 2,600 for Tesla stock in 2029 comes true. Then you would have to hold 385 Tesla shares right now or sometime between now and then to have $1 million worth of stock. Buying those shares at this time of this writing would cost you just about $105,000. So you would make 10x over the next 3.5 years or so. Based on just the significant initial outlay required, Tesla stock is unlikely the best candidate for most individual retail investors to become eventual millionaires. Having said that, the stock still has the potential to generate after return. So in other words, if you only invested $50,000 now, you'll only get to $500,000. I guess that would be obvious, and that paragraph might have been unnecessary. In the meantime, of course, you could also be building towards 300 and change shares by that time if being a specific millionaire was what you wanted to do, and if you wanted to have it all in one stock. All right, valuing Tesla, it says, I reference ARK's valuation model because it highlights how investors perceive the stock differently. For bulls like ARK, the case for Tesla rests on its robotaxi offerings, which it attributes as much as 88% of total company value, compared to just 9% for everything else. In this article, it says for its electric vehicles, but no, that would have to be 9% for its electric vehicle, or maybe it's 9% for electric vehicles and 3% for the energy storage and everything else. That consideration goes a long way towards explaining why Tesla trades at nosebleed valuations compared with the more traditional automakers. What have I been saying for how long? Although Tesla is a highly successful EV company, the case for its stock lies in long-term revenue generation from profit sharing on its miles driven on robotaxis or its own fleet, more than that. And the market knows it. let's put it another way. Under the ARC model, roughly $2,288 per share comes from robotaxis and just $234 to Tesla as an EV plus storage company. Consequently, investors need to accept the following. It didn't say that plus storage company part. I added that. Consequently, investors need to accept the following. Tesla will release its robotaxi service, possibly featuring its Cybercab in due course. CEO Elon Musk maintained it will launch unsupervised full self-driving as a paid service in Austin in June. That's not said very well, but it's close enough. Tesla's purpose-built robotaxi Cybercab will begin volume production soon, probably by the beginning of next year. I'm adding that. Management maintains volume production will start in 2026. Adoption will be rapid, regulatory hurdles will be overcome, and safety concerns will be reassured. Well, yeah, either they'll work, either the numbers will be obvious and everybody will go, well, that's obvious, or they won't be obvious, and that will be a concern. Tesla will be able to produce a low-cost Cybercab. This is another theory that needs to be addressed, they think, in order to get to that million valuation. Tesla will be able to produce a low-cost Cybercab that can generate significantly lower cost per ride than alternatives, like Waymo and traditional cab services. Obviously, if they accomplish the first part, the Cybercab will accomplish the second part. The good news is that investors have reasons to be positive. Well, there you go. First, while relatively high interest rates have negatively impacted automakers' EV plans, Tesla carried on investing and reducing its cost per vehicle to below $35,000 at the end of 2024 from above $38,000 at the start of 2023. That matters because EVs need to be affordable to encourage adoption. Everything needs to be affordable too. The Cybercab needs to be affordable, and the management claims it will launch a more affordable model in the first half of 2025. Second, Tesla needs and has leadership in EVs. That's important for robotaxis because it means Tesla has a huge and continuously growing set of data from the autopilot and full service driving technology on Tesla cars in continuous use, adding more and more data. That should enable it to lower the cost per ride and improve its unsupervised FSD solution. Third, while its declining sales in 2025 have attracted much media attention, the reality is that Tesla has more than 44% market share of EV sales in the US and the number one selling car in almost every market in the fourth quarter of 2024. The company has the best recognition and familiarity to succeed with robotaxis. Well, it says, why is Tesla stock risky? By the way, they left out the whole idea of converting 7 million cars or some portion of them to robotaxis. And I've said all along, I don't think it'll be more than 20%, but even 20% of 7 million is 1.4 million vehicles that can be converted. Unfortunately, while there are many positives, there are question marks. Most of the value of the stock is in technology that is not in service yet. That's true. Tesla has a record of over-promising and under-delivering on unsupervised FSD and robotaxi Cybercab. If you didn't take a listen to the video I did yesterday with with Phil Beisel, you need to go back and take a look. I'll try to remember to leave a card at the end. Will the Austin launch happen? Will the Cybercab be part of it? And will Cybercab be in volume production in 2026? Will the more affordable model be launched imminently? Will the tariff skirmish with China turn it into a war and negatively impact Tesla's cost base, not least because it buys batteries and other components from China? Well, I think that if the problem with batteries continues in China, we will have plenty of resources from Panasonic, from LG, from who else? One more big one that's making in the U.S. plus all the batteries that we're going to be making on our own. Okay, Herbert Ong has this news. He says Tesla price target lowered to 314 from 320 at RBC Capital. Boy, that's really a thin decision. They wanted to lower it, but they didn't want to lower it much. I don't know what was. So RBC Capital lowered the firm's price target on Tesla to $314 from $320, which is significantly above where we are now, and keeps an outperform rating on the shares as part of broader research note providing Q1 results for automakers. The quarter maker could benefit from pre-buy-in in March ahead of tariff launch. The analyst retail investors in a research note, while the firm doesn't expect much commentary on tariff impacts, with regard to Q1 earnings, guidance in the sector could be pulled or lowered, even though consensus is largely already at the lower end of the target ranges, RBC notes. Given macro uncertainty, RBC is favoring the OEMs over suppliers through investors making a no tariff, though investors make a no tariff call could potentially make large gains owning the entire group. News, Brookshire Megapactory full steam ahead. There's a new city we need to remember the name of. Brookshire in Texas is where the new Megapactory is going to be. I visited the Empire West complex in Brookshire, Texas today. The entire area plus the adjacent warehouses is the future Megapactory. He said Megafactory, but of course I changed it. The 1 million square foot warehouse already existing, seen at the end of the video, well, his video, will be converted into the Megafactory, and the 600,000 foot, anyway, it doesn't say foot, but anyway, that's what I'm sure he means. Square foot construction area will be the distribution center, and was not expecting to see it this far along. So good news coming out of the new Megapactory in Texas. All right, this is Randy Kirk. Hit like, hit subscribe, hit notify, join Patreon, become a member. Yeah, okay. There will be one more show yet today. Later on today, I will have a very special show where I'm going to just separate truth from fiction. Yeah, I'm going to give you facts that are important for you to know about markets, about Tesla, about the stock market, about the tariffs, about nonsense. I'm going to try to really lay out the facts instead of the fiction that so many people are scaring you with. Anyway, consumers, and I really mean facts. Consumer spending update. Economic confidence bounces back in April. This is from Rasmussen reports. Economic confidence increased to 111.3 in this month's Rasmussen reports economic index. That's more than 4 points higher than March. Enthusiasm about the economy surged during President Donald Trump's first term, reaching as high as 147.8 in January 2020 before tumbling after the COVID virus hit. By November 2020, it had recovered to 126.4, but dropped sharply after President Joe Biden was elected. It reached a low of 78.6 in July of 2022. Said 38% of American adults rate the economy as excellent or good at this point, this month, up 8 points from last month. The number who rate the economy as poor is 31%, which is down 2 points from March. So there's some good news for you. This is from Mario Knopfel. He says, New England to nearly double defense spending to 2% of their GDP. New England, there's only sheep down there. They're gonna outfit. I'm sorry, CERN. Am I making fun of your country? They're going to put Uzis on the backs of sheep. New Zealand will boost military spending over the next 4 years and aims to nearly double defense spending to 2%. The move comes among escalating global tensions and criticism over historically low defense investment. And that could be China, right? I think that's the only person they'd be worried about. I guess North Korea, but probably not. Keep in mind, this is, this is I'm sure a result of all the pressure that Trump is putting on our allies to start defending themselves, spending their own money on their own defense, because we just can't do it anymore. Okay, so with regard to what's coming up this week, keep in mind this is a short week, Good Friday. There is no market. So that means we're down to 6 trading sessions before Tesla reports their earnings. Okay, on Monday, all we have on Monday is 2 Philadelphia Fed speakers. That could always be harmful, but we'll see. And then on Tuesday, we get the import price index. That should be super interesting. Won't really be too many tariffs involved in that yet. But last month it went up 0.4%. They're thinking it'll only go up 0.1% this month, which would suggest no tariff impact. And in fact, might even suggest that companies were making deals with suppliers overseas in order to get them to buy even more and more and more in order to build up their inventories. Anyway, then we have import index minus fuel. They're thinking that last month it was up 0.3%. They're thinking that'll be flat. And then we also get on Tuesday the Empire State Manufacturing Survey. You know, Empire State, that's where the building is. Anyway, that's the New York area. Last month, it was down 20 points. And they're thinking it'll be down 10 more points this month. I wouldn't, I'd be a little shocked. We'll see, because that's not what I'm hearing. Anyway, okay. On Wednesday, we have US retail sales. They were up 2% last month. And I'm sorry, 0.2% last month. They're thinking that retail sales will be up 1 point. This is March, 1.2%. That would be big. Then retail sales minus auto also last month was up 0.3. They're thinking that'll be up 0.4. They're thinking that industrial, which would mean that retail sales, that auto retail sales were up a lot in March, but we've heard that people trying to beat the tariffs. So that may be a big reason. Okay. Industrial production comes out on Wednesday morning as well. Last month it was up 0.7. They're thinking that'll be down 0.2. So for some reason, they're thinking that industrial manufacturing, et cetera, is going to be off right now. Capacity utilization last month was 78.2. They're thinking 77.9. Business inventories at 0.3 were up 0.3%. They're thinking it'd be up another 0.3%. I would think if all this incoming inventory from overseas, you would think that overall business inventories would be up more than that. Then the home builders' confidence, they're thinking that'll drop from 39 to 38. That's very probably true because the interest rates were, I think, already starting to go up by the end. No, we had lower interest rates by the end of March. So maybe that might turn out to be a surprise also. But I would think right now they might be a little down again. In the, you know, if they would take that survey now, they might be a little more negative because interest rates have, of course, popped back up. We'll check in a minute. We'll see where interest rates are. And initial jobless claims, those come in on Thursday, of course. They're not giving us a guess. Last month, they hit it on the nose. So they're like, okay, we've done that once. We're never going to guess again. Housing, and last week was 223. My guess is it won't change much. Housing starts 1.5 million annualized basis. They're thinking they'll drop dramatically to 1.41 million. Maybe because of tariffs. Maybe that's what they're thinking. Maybe that's why the housing leadership will be negative. Yeah, so they might be thinking about those tariffs coming in on lumber and steel, et cetera. Yeah, that can impact. Although they think the building permits will be fine. 1.46 million last month, they think it'll be the same. So that doesn't add up. Yeah, okay, I'm confused. Philadelphia Fed comes in with their manufacturing survey on Thursday, and that's all we have for the week. Okay, then we have an important week for earnings. And so we have to take a look. We want to take a look at how all that going to work out this week. Okay, let's look at. We have the banks as leading out during the week, and then as we go through the week, there will be some consumer companies as well. So Goldman Sachs will be up first. They are expecting $8.88 in earnings. Sachs is heavily tied to investment banking, sensitive to economic uncertainty. So analysts are noting a downgrade to hold due to recession risks. So we'll see on that one. We'll also be looking very heavily at their guidance on Monday. Then Bank of America on Tuesday. Their consumer and commercial lending exposures make it a bellwether for economic health. So we'll be looking at Bank of America to see what they're saying about the consumer, especially with regard to, how they're seeing these tariffs playing out. That'll be super interesting to see what they say. Citigroup then comes out also, and they have global operations, and so they're very exposed to tariff risks. So we'll see how their guidance comes out on Monday. I'm sorry, that's Tuesday, I think. Johnson & Johnson will give us exposure to the consumers and what they're thinking. In particular, they probably are importing a lot of those pills and things that they sell. United Airlines also will give us exposure to the consumer on an international basis. There's been some pressure on airlines, indications of less travel, especially by government. So we'll get a wide range of opinion on that. Then on Wednesday, U.S. Bancorp, another bank comes in. They're going to be sensitive to interest rate expectations because regional they are big with the regional banks. Abbott Laboratories, they'll be coming out again, similar, another medical company that will be able to see whether is healthcare a good defensive place for you to be right now. And then we've got on Thursday, got Netflix. So very much in the consumer and the technology space will help us in that regard. American Express, consumers again, and how are they spending? How are they borrowing? And then United Health Group comes in with another health industry result. Okay, so that is what we've got coming up in that. Let's go ahead now and take a look at the where the markets are. So let's, well, boy, am I interested in this. Okay, so we will not have Tesla yet because I'm recording this at right now it's 4:09. So we don't have Tesla yet, but we have the pre-market. If you listen later tonight, we'll talk about the Tesla story as it is at that point in the overnights. All right. So pre-market right now, we have the stocks are up 61 on the Dow, but that is lower than it was when I first started looking at it an hour ago. It was up over 100, and now it's sitting at 58. So we're starting to get a little of the glow. A little of the glow is coming off. S&P, same thing. It's up 25 or 0.46%, but not as much as it was. NASDAQ also same, but up 137 or 0.73. We have got the bond market then. This is one that, of course, I care about and we should all care about right now. Oh, is this not showing? We're still not getting the new. Is this not going to be till 5 o'clock? Oh, I waited until 4 because I wanted to report on the bonds, but I guess I was sure they'd be out by now. What's wrong? Okay, so I'll report on that at this other show that I'm going to do at 7:45 will be when you'll be able to watch that. I'm very sad not to be able to report the bonds. Okay, so oil is sitting at down 28 cents right now, 61.22. So not much news there. Natural gas is down 1.42 at 3.477. That's pretty normal range right there for recently. Gold, now this is the interesting one. It had been up to 32 and change. It is now still sitting at 32.37, but it is down $7. Silver up a little bit though, at the same time, up 0.14%, and copper up 0.63%. So gold, very interesting to watch. We'll be talking about all of this in this show at 7:45. Then we've got the dollar. It says it's under pressure, but I'm seeing mixed here. I'm not sure which one is true. Bitcoin was up more than this, so it's come down. It's kind of the same business, but it's going to look bad because it's showing down 1458. But of course, it traded all day yesterday, and yesterday it was up strongly. So we're sitting at 83,511, which is a much. It's definitely a positive compared to where it was on Friday night. All right, so that is where the markets are now. Again, join me at 7:45. I'll look forward to seeing you then. We'll talk about the facts, okay? And then in the meantime, you can go take a look at that Phil Basel. I don't know why I'm having such a hard time with Phil's last name. Buy, sell. He tells me that I should be able to remember that. Buy, sell. Well, it's spelled BEISEL. So therefore, I want to say something other. I want to say, yeah. Having said all that, is there anything I have left to tell you? I don't think so. Just, join Patreon. Okay, that's it. Thanks for watching. It's been great talking to you.